Hey everybody, it's July 12th. Welcome back. Got a couple of interesting things to talk about with Bitcoin, obviously trading sideways for the past couple of weeks. Some more news on ETFs and their impact, and then also talking about more institutional adoption and then DeFi. So let's jump right in. So first thing I want to talk about is the Bitcoin performance. So Andrew Kang put out this interesting chart where he's tracking the Bitcoin related equities. So the stocks that are related to Bitcoin in one way or another, that's MicroStrategy, Riot, which is a miner, a Bitcoin miner, and Marathon, which is also a Bitcoin miner. So basically tracking these equities that are related to Bitcoin and then tracking the actual Bitcoin price to see the performance difference. And as you can see here, kind of an interesting chart to look at because you see, obviously since the beginning of July, you see a big break in the trend where these Bitcoin related equities start really outperforming the actual Bitcoin price. So a couple different things you could point to with this. I think the most obvious one is that since this ETF news, we've seen a lot of big funds and companies start to buy Bitcoin related exposure. So obviously for a lot of these companies, they can't just go out and buy actual Bitcoin. It requires a lot of, regulatory approvals and loopholes and filings, but they can go out and buy equities. So obviously MicroStrategy, Coinbase, Riot, and others give you that Bitcoin exposure without actually having to own the Bitcoin. So for these companies and funds, it's definitely easier to go out and buy these equities. So I think this kind of signals that there is institutional money coming into the space, but they're obviously getting their exposure outside of native Bitcoin itself. So, I just thought his conclusion was kind of interesting that this trade is getting more and more crowded as hedge funds start to get in, basically pricing in that this ETF from BlackRock and others might actually get approved. So something to keep an eye on if this trend continues where these equities keep outperforming. I think it's just an indication of a lot more institutional money since retail, I think, is primarily going to be buying actual Bitcoin. And then this is kind of related from Will Clemente, just talking about, Bitcoin and the price movements relative to spot and leverage trading. So the reason why I find this interesting is that, a lot of times we see a lot of tether FUD and we see people talking about how there's all this like leverage that props up the Bitcoin price and that, creates an unhealthy dynamic. And that's why you see, such crazy crashes afterwards. But I definitely do think there's a lot of spot activity. And I also think that, like we talked about with the previous one, a lot of interest in the equity side of things. So something to keep an eye on too is are we looking at like a leveraged move up and it's a short-term move or something more long-term? I believe it's something more long-term. You're seeing a lot of Bitcoin also leave exchanges, which I think is super positive. You're seeing people buy up Bitcoin and then move it into native wallets, and the number of people with at least one Bitcoin in a wallet has only been increasing. So definitely a bullish thing for me. So this one's kind of funny, but Standard Chartered Bank predicted that Bitcoin would crash to $5,000 back in December 2022. And then this month, just today, they came out and said that they predict Bitcoin will pump over $120,000 next year. So kind of a big flip of events. But, something that I've talked about quite a lot is that, when people like Larry Fink, the CEO of BlackRock, and others start to jump into Bitcoin, they basically pave the way for other people to not look stupid or risk their career by also jumping into Bitcoin. So, Bitcoin is something that a lot of institutions and people that work at the institutions don't want to talk about, for various risks and they don't want to present it to their clients and stuff like that. But when BlackRock and Fidelity and ARK and all these big companies and funds start to actually jump into the space, they're almost saying that it's okay for you to talk about it. So definitely a big narrative shift, I think, for institutional money. And speaking of institutional money, I wrote this article yesterday, but Vanguard now owns $560 million in Bitcoin mining stocks. So that's between Riot and Marathon. They're now the largest holders of those two. And BlackRock also holds a huge stake in I think in Marathon. Um, so it's definitely something to watch. And you know, the first thing I talked about was that you're seeing a lot more money flow into these Bitcoin related equities. So you know, a lot of companies will go out and own these equities, and especially with these Bitcoin mining companies, I think they're looking for something that actually like has more reality to it in terms of producing cash flow and some sort of business model. So a lot of people, like for example Warren Buffett, would never own something that doesn't produce cash flow. So for example, he said he would never own gold, but then he went out and bought gold miners. So you know, it's not a crazy leap to consider that there is a lot of institutional money out there that would own Bitcoin mining stocks over actual Bitcoin itself. So just something interesting that I found, and I think we're going to start to see a lot more money flood into those Bitcoin miners. So definitely something to look at. I personally don't own any Bitcoin mining stocks, but I would definitely consider it. I just prefer to hold the actual Bitcoin. So just to close us out with some DeFi stuff, obviously I track DeFi pretty closely. So institutions are coming into Bitcoin, right? And I think we're all pretty set on accepting that. I think one of the next big stages is going to be DeFi and traditional finance getting into some of this more fringe activity in the crypto space. We kind of already saw it in certain ways. I know Mark Cuban got big on DeFi and then lost a bunch of money, but you know, I do think DeFi has a huge potential, and I think that the total addressable market of DeFi is just ridiculous. So if you consider that, you know, TradFi has all these different mechanics for, you know, deploying capital, DeFi, you know, takes that to the next level. So DeFi is still super tiny. I'm not trying to say that it's going to like flip TradFi in any sort of way, but I do think that traditional finance is going to start to look for products that they can release in the DeFi space. Real world assets. So, you know, basically tokens that track things in the real world are starting to grow. So this shows they're at $588 million right now. Obviously a drop of the bucket, absolutely nothing and meaningless to TradFi. But like I said, I think they're going to slowly start to adopt Bitcoin and then slowly start to get into some of these more DeFi products where they can, you know, at the end of the day, these institutions just want to make money, right? So if they can build some sort of, you know, leverage product, for example, and release it on DeFi and make a really good spread with no middlemen and you know, very minimal exchanges and fees, I definitely think that's something that they would do. So this is kind of related with so treasury bond yields are now more than the median yield on DeFi Llama, which just tracks a bunch of different DeFi a bunch of different platforms that are huge in DeFi, basically. So you know, the yields on a lot of DeFi projects has definitely dropped. You know, at one point we obviously saw crazy yields, you know, 20, 30, 50%. But since the bear market, these yields came down, and obviously the tokens that were rewarded in came down. But there are some real yield projects, and there's a real yield narrative out there. So projects like Curve that generate real, you know, fee revenue and transaction volume are definitely paying out decent APRs for people pooling capital. But you can see that basically there's a huge disconnect in DeFi, I think, and there's a huge you know, that bear market cycle hasn't ended for DeFi in the way that it's kind of ended for Bitcoin. So something I'm keeping an eye on is DeFi yields and seeing them kind of flip back. Obviously, I'm a pretty big holder in Thorchain, which is a multi-chain DeFi project. So, you know, my bet on DeFi is that it's still depressed, and owning something like Rune, which is Thorchain's token, is my bet that, you know, DeFi is going to recover. So that's kind of one of the trades I'm making. You know, Bitcoin obviously being like the huge long-term thesis of we're front running the institutions, and this is going to be, you know, an international asset, which BlackRock just said recently. And then, you know, that's a big trade for me. But then the other big trade long-term is that DeFi is extremely depressed right now, but I do think that it has a lot of potential in the future. So making some bets on DeFi by owning a few projects that I think are gonna make waves in the future. So that's all for today. We'll catch you guys later.